Okay, so we are ready to start chapter 5. Here. Don't forget, if you haven't done your test yet, it is due tonight. So make sure you get that taken. So chapter 5, we are ready to talk about job costing. So again, on Canvas, if you go out under Unit 2, you should see a link to, wait, I need to activate it, publish it. You'll see a link to the chapter 5 practice. I just made that active. Also, there are some chapter 5 notes that you can download as well. Load the chapter 5 practice. So you may have to refresh your screen on Canvas to see that chapter 5 practice link. There we go. Okay. So we learned in chapter 4 how to do the predetermined overhead rate and then apply overhead based on that predetermined overhead rate. So we're still doing that. We're still applying overhead with that same concept. But now we're just looking at job costing. So specifically, when a company that has unique products that they offer will use job costing. So for instance, when I used to work at Ford Audio Video, we installed custom audio video systems. So every job was different, as far as what labor we put in, the engineering, like the designing, and then the products, everything was custom based on, the needs of the customer. So that was a great example of job costing, because when we do things that are unique builds, we're putting in different resources, it makes more sense than to track your job costs to the job. So that's how it works. When you do job costing, you're looking at a company that produces a product. It may be like manufacturing and service combined, which was kind of our situation. So you're providing a custom product, basically. So it may not be service too. It could just be that you make custom furniture or something, or jewelry, or anything like that, that every piece that you make is different. So the labor, materials, overhead is all going to be different, okay? So with job costing, if we have whatever we're producing or selling is unique and customized, it makes more sense then to track our costs directly to each job, okay? So we're going to look at, okay, if I'm doing this install for this client, so all the materials that I purchase for that job, I'm going to apply to that job's cost. And all the labor, I'm going to track it to that job. And then we'll assign overhead still based on direct labor or something for each job. So then we can bill the client, based on what we actually charged. We upcharge it and we can sell it. So that's very common, and that's what we're focusing on in chapter 5. So we're looking at job order costing. So we're tracking. Really what changes here is our whole flow is still the same. We have materials coming in to the materials account. Work in process, you still have materials and labor and overhead flowing in. And then when those get finished, they go to finished goods. From finished goods, when we sell them, they go to cost of goods sold. So your inventory flow is still the same. The only difference is now we're taking it job by job. So a job will start in work in process. And when that whole job is finished, it gets transferred to finished goods. From finished goods, when we sell it, the whole job and all of its costs go to cost of goods sold. So the flow is still the same. So it's not hopefully too bad of a chapter. A lot of math, but we're kind of used to that, right? In cost accounting by now. That's a lot of math. So, and a lot of wording. You're probably used to that too. A lot of words and a lot of math. So this very first one, what we're seeing here is, 4 separate jobs for Naranjo Company. They're doing industrial prototypes for outside companies. So they give us a lot of information. So this was during June, and this is the costs for June. So we have each job, their beginning balance, any materials requisitioned for the job, and any direct labor costs, okay? So those beginning balances are already sitting out there in work in process. All 4 of these jobs, or no, it looks like job 42 didn't have a beginning balance. So 39, 40, and 41 were already started. They're sitting out in work in process. To finish them off, you know, we're adding in more material, more labor, and more overhead. And then they give us a bunch of other information as well. But on this one, we are going to calculate an overhead rate based on direct labor costs. Well, again, the start of this is pretty much a review from chapter 4 because we're just determining overhead rate. So it tells us budgeted overhead for the year was $260,000 and budgeted direct labor hours were 20,000. The average wage rate for direct labor is $25 per hour. Again, they give us some other information. We'll come back to this other information. It says calculate the overhead rate based on direct labor cost. Okay. Well, just like we did in chapter 4, we take our budgeted overhead, which was $260,000. Okay. $260,000 for our entire overhead, and we're going to divide it by our direct labor cost. Okay. Well, they told us we have direct labor hours of 20,000 and an average rate of $25 per hour. So we have to calculate the average labor cost. But we're dividing 260 by the average labor cost. So 20,000 hours times $25 per hour. Okay. So we're really just taking 260,000 divided by, this is 500,000. So our overhead rate, 260,000 divided by 500,000, or 52%. So we're going to apply overhead at 52% of direct labor cost. Okay. So again, we're really doing the same thing there that we did in chapter 4. We're just determining a predetermined overhead rate. So each job is going to get overhead applied at 52% of each job's direct labor cost. So instead of looking at direct labor for the whole period, we're just breaking it down by job. Okay. So when we see this job order cost sheet, what we're doing here is we're just filling in the total cost for these jobs as of the end of June. Okay. So a lot of this is just copying stuff from this table. So basically we start with all of this stuff up here, beginning balance, materials, labor, and just copy it down. Okay. So for example, the balance of job 39 was $23,700. Okay. And then they told us we added direct materials will be the next one. We added materials of $18,900. $18,900. And then we added labor of $10,000. And then the last product cost is our overhead, applied overhead. Well, again, we already calculated our rate. So overhead is going to be applied at 52% of direct labor. So what is my applied overhead for job 39?
5,200.
Very good, 5,200. So we're just taking 52% of direct labor. So 52% of 10,000. So that's how much overhead got applied to job 39. And then to save time, I'll give you the total numbers here too. It's 57,800. So 57,800 is my cost so far on job 39. And I'm just doing the same thing for job 40. So the first 3 lines, I'm just filling in what they gave me. 34,600, the balance, or sorry, 34,600. Materials were 21,400. Labor was 18,500. And so what is my applied overhead for job 40? Very good, 9,620. Okay, and again, we're just taking 52% of direct labor, so 52% of 18,500. Same for job 41. We start with 17,000. We add in materials of 8,350. Add in labor of 3,000. And then what is my applied overhead for job 41?
1,560.
Very good, 1,560. 52% of 3,000. And then job 42, we had 0 beginning cost. Materials was 12,000. Labor was 2,900. And then my applied overhead for job 42. How much did you guys get for that?
1,508.
Perfect, 1,508. And then again, you're just adding up total costs. So job 40 should be 84,120. 84,120. Job 41 should be 29,910. 29,910. And job 42 should be 16,408. 16,408. So that gives us our total job costs for all 4 jobs for the month of June. So it says, what if the expected direct labor rate at the beginning of the year was $20 instead of $25? So this 25 would change to 20. So what would our new budgeted direct labor cost be? Well, we would take 20,000 times 20 instead of by 25. Okay, so our new budgeted labor cost would be what, 400,000. Okay, so this would change to 20, which would change that to 400,000. So our overhead rate would be 260,000 divided by 400,000. So what's my new overhead rate? Very good, 65%. And how does that affect the jobs, the cost of the jobs? Yeah, very good. Yeah, applied overhead would increase, so the total cost of the job would increase. Because we'd be applying overhead at a higher rate. So overhead costs would be more. So again, the only thing we're doing differently here is breaking it down by job. Okay, instead of looking at total costs, we're breaking it down and applying overhead by job. Okay. That one's not too bad, right? Pretty easy. Any questions on that one? That's good. Okay. So here I thought they were the exact same numbers, but they tried to they changed one number just to throw it off. So I should love it when they do that. And again, on your homework, your numbers may all be different, so you'd have to look at total job costs, But most of the costs are the same. The only one that's different is direct labor cost under job 40 is 18,000 instead of 18,500. I think it's probably a typo, and then I don't even know, because usually it follows. But that's okay, because we'll just, make this work a little harder. But mostly the same information. We have the same budgeted overhead, same direct labor hours, same rate, okay, everything like that. But here, it wants us to, we're going to calculate the work in process, accounts, the finished goods, cost of goods sold. So that's when the stuff we really kind of ignored in the first problem kind of comes in. So overhead is assigned as a percentage of direct labor, which is what we did last on the first one. During June, jobs 39 and 40 were completed. So if they were completed, then they were transferred out of work in process into finished goods. And then job 39 was sold at 130% of cost. So since 39 was sold, it gets moved out of finished goods into cost of goods sold. Okay. That we don't really have to worry about. Job 41 and 42 remain unfinished at the end of the month. Okay. So out of those 4 jobs, we finished 2, sold 1, and the 2 are still in work in process. So it wants us to calculate the balance in the work in process as of June 30th. Well, we only have 2 jobs that are still in work in process. Okay. So in our work in process, it tells us we have jobs 41 and 42. Okay. So we have job 41 and job 42 are still in work in process. So to calculate the balance, well, again, thankfully we can actually look at the last exercise to get their total costs. But if we couldn't, we'll just pretend we couldn't, because on the homework you'll have all new numbers, right? So for job 41, to calculate the costs, we would do the same thing we did in exercise 1. So we would take beginning balance plus materials plus labor plus applied overhead. Okay, so we would add up all of those, and just as a recap, we applied labor on job 41 of $1,560. So we'd add all that up again, and it's $29,910, sorry. $29,910. And then we do the same for job 42. Again, we've already calculated the overhead, so we'll make it easy. So the total cost for job 42 was $16,408. So again, on your homework, if you don't, if they're new numbers, you're going to go off of what was given and just make sure you calculate your predetermined overhead rate and apply overhead to direct labor. Okay, so what we did in the first example. So we already have those numbers. So for the work in process, it's just these 2 jobs. So I would just add them together to get what's left in work in process. Okay. So that's $46,318. Okay. That's the balance in work in process. 46,318. In finished goods, we just have job 40. And then down here in cost of goods sold, we have job 39. Okay. So job 40 was the special one that they changed the numbers on me. So I would need to recalculate those costs. So, I had, again, 34,600 beginning, 21,400 in materials, 18,000 in labor. So my overhead rate is still the 52%. So how much overhead would I apply for 18,000 hours? For $18,000. Calculate that. You're just doing
9,300.
very good, 9,360. You're just doing your 52% of the 18,000. Okay, just like we did in exercise 1. So I would just add all of these up. Okay. So I take the beginning plus materials plus labor plus the applied overhead, 52% of 18,000, and my finished goods should be 83,360. So the only thing in finished goods is job 40, and it's $83,360. The only thing in cost of goods sold is job 39, and that was 57,800. Job 39 was 57,800. On number 4, it just says calculate the price charged. Well, it told us we sold it at 130% of the cost. So how much did I sell job 39 for? Very good, $75,140. So we just took 57,800 times 1.3 or 130%. So it sold for $75,140. Okay. On number 5, it says, what if the customer for job 40, which is sitting in finished goods, what if the customer was able to pay for the job by June 30th? What would happen to the balance in finished goods? What would happen to this? If they paid it, well, where would it be? It would go down. Yeah, it would decrease because that finished goods would transfer out into cost of goods sold. Okay. So yeah, very good. Finished goods would decrease. And what would happen to cost of goods sold? Increase. Because it's going from here, it would be transferred out and transferred in to cost of goods sold. Any questions on that one? So there we're just starting to look a little bit more at the jobs in the different inventory process. Okay. Alrighty. On this next one, we're just going to look a little bit at normal spoilage. Your book talked about spoilage, both normal and abnormal. So if it's just a normal spoilage, which we know that's going to happen, especially in manufacturing, where something's going to happen and we're going to produce something may go wrong in the process, and we produce something that's not, able to be sold, or we make the wrong color or the wrong size, or, there's lots of variations of what could go wrong in manufacturing. So if it's just a normal amount of spoilage, we're just going to basically charge it to the overhead account, and that's going to get spread out over all the jobs. So it's just a normal amount of spoilage just kind of gets spread out across all the jobs. So we do that by costing it to the overhead control. We're not really going to deal with the abnormal spoilage. It gets a little trickier. You'd have a special control account for that, so we're not going to look at it. But on the normal spoilage, that's a common thing. So we're going to look at that. So in this case, we have a company that installs granite countertops. So they measure the custom, the home, and then they cut the granite to that shape and they install it. So in this case, it's the Trammell job. And we had direct materials of $1,900 and direct labor of $500. Overhead is applied at a rate of 140% of direct labor. But unfortunately, when we're installing, one small countertop breaks. So we have to cut another piece and install it to complete the job. Okay. So it costs an additional $400 of materials and $100 of labor. Okay. It was due to carelessness, and it is considered normal spoilage. So if it's considered a normal spoilage, we're not going to charge just this job. That they probably would really freak out, right? You broke a part of their granite countertop and then charged them $500 to fix it. So we're going to charge it to the overhead and just kind of spread that cost out as an overhead cost. Okay. So the first thing it wants us to do is just calculate the cost of the Trammell job. Okay. So again, this normal spoilage does not affect the Trammell job. Okay. So we're really just looking at the normal calculations. So, we had materials of $1,900. We had direct materials of $1,900. Then we had direct labor of $500. And then overhead is applied at 1.3 or 140% of labor. So overhead would be 500 labor hours times 1.4, which is 700. Okay. So overhead's applied at 1.4 or 140% of labor. So overhead on this job would be $700. So all total, our job cost is $3,100. Okay. And then the journal entry to deal with that normal spoilage, again, we're just going to charge that whole amount to the overhead control. Okay. So overhead control is going to get debited $500, and that was $400 of materials and $100 of labor. So we debit the overhead control $500. And then we're going to credit materials 400, bless you, because 400 of it came from materials. And then we'll credit payroll for the labor, the 100. Okay. So if you remember from chapter 4, that overhead control account, we're going to keep track of our actual and our applied overhead as we go through, you know, the period. So we're just going to charge that as an actual overhead cost. So it'll get added in, you know, with all of our other overheads. And at the end of the month, we would still look at what we actually applied, see if we over or under applied, and deal with it then. So if this caused us to, you know, under apply overhead, that cost is going to be a cost to us. It's going to be out of our profit, basically. So that's how it gets handled. So normal spoilage isn't really affecting the customers, which is fair, right? I mean, we shouldn't really charge them. But a lot of times we do calculate some of those abnormal or normal spoilage costs into our applied overhead. You know, we get a little wiggle room, right? Because, you know, it is a normal expense. So are the customers being charged? Not directly. But, you know, we pay for that. That's why it's good if we go with a good manufacturing company. You know, if we get our manufacturing processes down, we have less spoilage, we can lower our prices, our customers will be happy, yeah, and so on and so forth. So that's, you know, a big part of managerial is not just looking at those costs, but figuring those things out too. If we have a high number of normal spoilage, it's raising our costs indirectly. So it's something to consider. Just a little sidebar. So what if the additional rework required $200 of direct labor? What would be the effect on the cost of the Trammell job? There would be no effect, right? Like that charge has already been made to them. So the cost of the Trammell job would not be affected. What would be affected is our overhead control, which again could cause us to be over, you know, on how much overhead we have. And it could cost us into our profits, basically. Are there any questions on that one? It's pretty straightforward. Just learning how to deal with it. All right. Let's move on to the next one, the fourth one here. Seeing what I have left here. 3 left. Okay. So here we are looking at Vince Melders designs and installs custom lawn and garden irrigation systems. So what we're going to look at here is if we could actually change it, like how they cost right now. So what they're looking at here is they have a job processing situation because each job is different, requiring different materials and different amounts of labor for installing the systems. So in general, we have number of direct labor hours, direct labor cost, overhead cost, all of that so we can apply overhead, you know, if we needed to. And then here's the actual numbers. These were the estimates. Here's the actual. Really, that's not a big consequence to us right now. So the owner of the company noticed that the watering systems for many houses in one subdivision had the same layout. So, you know, if you have a cookie cutter neighborhood and all the lawns are the same size, you know, same shape, then it's going to be basically the same installation. So he met with the builders and decided to offer a basic watering system. Because, you know, if you've planned one, then you can plan them all, right? So that cuts down on our costs. So then they should have the same material, labor, and overhead if they're all the same. Well, that really switches us into process costing, which we'll deal with more next chapter. But it's just kind of showing you in this one the difference. So if it's unique, if every lawn is different, you're going to have a different price. But if you run into a situation where they're all the same, like in this subdivision, we could actually, he's going to start, I think, he starts a new business. I don't know why. He starts a whole new business to offer it. I guess it makes it easier to account for. And to handle just the subdivision. Okay, so and it's kind of showing us in the little chart here, over 3 months in the summer, how many systems were installed, the materials, labor, and overhead for each of these. Okay. So now we're looking at this irrigation specialties, and it says, should they use process costing or job order costing? Process, right? Because they're all the same. So since all the lawns are virtually the same, irrigation specialties should use process costing. The original company, Ecoscape, would still be on the job order because all the lawns are different. Okay. So here on number 2, it asks if irrigation specialties use an actual or process costing, what is the cost of a single system installed in June, July, and August? Okay. I'm sorry, that's using, yeah. So we're actually going to just take all of their costs and divide it by the number of systems. So for June, we really just add up materials, labor, and overhead and divide by 60. Okay. So if we used an actual costing system and not process costing, we would add up materials, labor, and overhead and divide by 60. So what would June's per system cost be? Yeah, very good, $682. So materials plus labor plus overhead divided by number of systems. And then I would just do the same for July and August. So add up all their costs and divide by the systems. What is July's? Very good, $654. And then how about August? Very good, $621. Perfect. So if we used an actual costing system or like the job costing, that's how much the systems would cost, how much we would cost out. Okay. So now we're looking at switching and we're seeing, well, what if we did do process costing? And, you know, we applied overhead and we just looked at a single system, okay? So estimated overhead for the year is $54,000. Estimated production is 600 watering systems. So what is the overhead rate per system? Very good, $90. Okay, so under a normal costing system, if we did predetermined overhead rate, 54,000 divided by 600, we would charge $90 of overhead per watering irrigation system, sprinkling system installed. Okay. Well, then it wants us to calculate what the cost of a single system installed would be per system for each month. Okay. Well, to do that, I would still take my direct materials and direct labor, you know, so maybe you can do it one of two ways. It's easy, you know, whichever way you want to do it. I'm going to calculate I'm going to add those two together. So I get 30,000 in materials and labor. And then I divide by 60 units. Okay. So what's that, like 500, right? And then I add in the $90 of overhead, which is down below. Okay. So I added materials and labor. 18,000 plus 12,000 is 30,000 divided by the 60 units. So that's $500 plus the 90 of overhead. Okay, so that's where I get that. So it'd be $590 per system. What you'll notice is if you do the same thing for July and August, for July you take 24,000 plus 16,000, which is 40,000, divided by 80 units, you get 500. And then you add in the 90. Basically, the end game is when you come up with an applied overhead, you end up with 590 across the board because your materials and labor were the same on every job. Okay. So all that's changing is how we're applying overhead. So there we're coming up with a one cost. So we could assign costs, you know, it doesn't matter how many jobs we do, $590 per job in this subdivision, which lowers our cost, which is more accurate. All of that. Any questions on that one? So there you're just kind of looking at the difference between the costing systems. Okay. And since, again, the labor and materials is all the same, they shouldn't be different costs based on different months. We're applying overhead for the whole, you know, all this different overhead. So this is more accurate. It's a much more accurate costing system. Because they're all the same. I mean, I'd be pretty mad if I got charged a different rate just because I was in a different month that I got it installed. Probably happens, but you know, still, that's kind of what you're looking at there. And this is more accurate because then we can set our costs, you know, the price we're charging based on these costs, and they're not changing. You guys good? All right, moving on. Okay, so this one, during March, Aragon Company worked on 3 jobs, and here's the data: how many units, units sold, materials, labor, hours, and labor costs. Overhead is assigned on the basis of direct labor hours, and they give us the rate, $8.40 per direct labor hour. And then they tell us during March, job 78 and 79 were completed and transferred to finished goods, and job 79 was sold. Job 80 remains in work in process. So the first thing it wants us to do is calculate the per unit cost. So we have different amounts of units in each job for both job 78 and 79. Okay. Well, to do that, I probably need to figure the total cost, right? So that's basically what we're doing, is going to figure out the total cost first, which is what we've already been doing. And they give us the overhead, so it makes it easier. Okay. So for job 78, you have materials of $1,560, right? And you have labor of $3,000. What's materials and labor? Overhead is applied at $8.40 per direct labor hour. So 220 hours times $8.40. Overhead should be what, $18.48? So my total cost would be $6,408. Okay. So again, I'm just adding up product costs, materials plus labor plus overhead. And then we made 200 units in that order. That'd be 3204. Okay. So using what they gave me, materials plus labor are both given. 220 hours of labor at $8.40. Add it all up, divide by 200. Okay. So 78, job 78 is $32.04 per unit. 32.04. And then 79, we would do the same thing. So we have materials of $990, labor of $3,000, and then overhead we have 200 hours at $8.40. So $16.80 of overhead. So $16.80 of overhead. Our total cost is $5,670 divided by 180 units. So the cost per unit is $31.50. So doing the same stuff we've been doing, applying overhead, getting total product cost, only here we're just breaking it down by units. Okay. On number 2, it says compute the ending balance in the work in process account. Well, it told us job 80 was the only job in work in process. So looks like we get to figure our cost for job 80 as well. So on job 80, we had materials of 2,400, labor of 3,300, overhead we had 400 hours at $8.40. So overhead was 3,360. So our total job was $9,060. So what we did there, so we had 2,400 of materials, 3,300 labor, 400 labor hours at $8.04. So overhead was 3,360. So we add all those up, and job 80 was $9,060 total. And that's what's left in work in process. The other 2 jobs were completed. Okay. So then it just wants us to do the journal entries, and it wants to show the completion of jobs 78 and 79. Well, both of these jobs were completed, so I could just add those 2 together. I have my total cost here. So I would take 6,408 plus 5,670. So total cost was $12,078. Okay. And those are going from work in process into finished goods. So I'm just debiting finished goods and crediting work in process for those 2 jobs. So I just add their costs together, and I'm transferring them out of work in process by crediting it and debiting finished goods. And then it said we sold job 79. So 79 got moved out of finished goods into cost of goods sold. So there we're debiting cost of goods sold and crediting finished goods for just job 79. So just the 5,670. Okay. So just job 79 moved into cost of goods sold. And then last but not least, it wants us to journalize actually selling job 79. Well, it told us the selling price is 140% of cost. So 5,670 times 1.4 How much did I sell this job for? Very good, $7,938. And that's a typical sales entry. So it'd be accounts receivable or cash, depending on how they paid. And then the 5670 times 140%.
Okay.
Yeah. So accounts receivable or cash gets debited and sales revenue gets credited. And of course, we could always calculate our profit on the sale by taking the sales revenue minus cost of goods sold. That would tell us how much we made just on that one job in profit, gross profit there. Any questions on that one? So getting into a little bit more of the journaling side of it. You guys good? All righty. Last one, I think. I say that and there'll be like 5 more. No, I'm just kidding. It's the last one.
4.5 actually.
Yeah, just 4.5, you know. 4 pages each, no big deal.
And this one's long.
Yeah, this one is a little longer. So this one we're going to look at cost flows and do journal entries. I'm going to keep tabs of the T accounts as we go. It'll make it easier. Materials. Work in process. Finished goods. That's all we have to keep track of, but I'm going to put cost of goods sold and overhead up here as well. Okay, so April 1st, we show some beginning balances, materials, work in process, finished goods, and then it shows us what's in our work in process. So for this company, I don't know why they make up weird company names, Sing Biker. I think they do that just to torture me, you know, try to, like, can it just be like Smith Company?
Torture you.
Maybe you guys.
I think everyone feels an equal amount of pain.
I guess so. I'm like the one that has to say them, though, right?
And anyone else that has to present.
Right. We'll just call it S Company. So our work in process, then we have 3 jobs in work in process, and it gives our materials, labor, and overhead for those 3 jobs up to this point. So we're going to look at just the whole cost flow during April. Okay. And again, we're going to journalize and post T accounts. The only T accounts you have to post to are the 3 up here, but I put these up too because we're going to be using them a little bit. I just think it's useful. So the first thing I'm going to do before I start journalizing is I'm going to put in these beginning balances. Okay, so materials has a beginning balance of $12,730. I'm going to put BB for beginning balance. I think they just have us put balance. Work in process has a beginning balance of $21,340. And finished goods, $8,700. Okay. So then we're going to journalize and post to the T accounts, A through G. Okay. So the first one, A, it says we purchase materials on account. Well, what would I debit and credit to purchase materials on account? Fun review.
Materials and is it cash?
On
Oh,
account.
on account.
Yeah.
Accounts payable.
very good. Yeah, we purchased materials, so we're going to debit materials, the asset materials, and credit accounts payable. And that was for $29,000. Okay. So I'm going to keep track of them on the board, and then we'll fill in our T accounts later. So here we have materials flowing in under A of $29,000. So 29,000 materials get purchased. We're not showing the credit, but it's accounts payable. Let's see, on B, materials requisitioned. Well, for job 114, we use 16,500. Job 115, 12,200, and job 116, 5,000. Okay, so I would add up all three of those to figure out how many materials we took from materials and we're putting them into work in process. So we're taking raw materials and putting them into the process. So how many total materials are we dealing with here?
33,700.
Very good, 33,700. And again, when materials are requisitioned, that means they're being costed to the job. So I'm taking them out of raw materials and putting them into work in process. Okay, so those are getting debited into work in process. And they're coming out of materials. Okay, so I'm debiting work in process and crediting materials. Okay, so materials have been put into process. Let's see. Next, we have job tickets were collected and summarized. And it shows job 114, we had 150 hours at $12. And then we had 220 hours at $14 and 80 hours at $18. So we would need to calculate the total labor. So 150 times 12 plus 220 times 14 plus 80 times 18. Told you guys sometimes it's just a lot of math, right? Does anyone have that calculated? Very good, 6,320. So for all three jobs combined on part C, we have $6,320 of labor. Well, labor goes into work in process as well. So this was materials, and then on part C, we're adding labor in. Okay. So labor gets debited to work in process. So work in process gets debited. And we're just going to credit wages payable. So we can, cut checks later in payroll accounting. Don't worry about that. If you already took it, then you know what to do with it, right? Or you forgot. Either way, we're done. So that's materials and labor. And then part D, overhead. So overhead is applied on the basis of direct labor costs. Well, they didn't really tell us, did they? Did they give us any of that? So we have to calculate the percentage in which it was applied. So they didn't give us much to go on, but they did give us what we had already. So what I'm going to use is I'm going to look at what percentage did we apply overhead here. Okay, since they didn't give me anything to determine. So I'm just going to take, for let's just say job 114, it should be the same for either of any of the jobs. I'm going to take my applied overhead and divide it by my direct labor to figure out how I applied it. Okay, so 1170 divided by 1800. What do you get? Very good. So overhead's applied at 65%. So again, I took 1170 divided by 1800. So I was applying overhead at 65% of labor. Okay. I had to do a little digging there. Well, if my total labor was 6320, how much overhead do I need to apply?
4,108.
Very good, 4,108. So that's my amount for D. Okay. So 65% of my labor is 4,108, and that also flows into work in process as my overhead. So that's applied overhead. Okay. My D is really messed up. So overhead gets put into work in process. What do I credit? Where do I credit that? Overhead control. Very good. That's why I wrote it up here. We don't have to keep track of it, but I think it's useful up there. So applied overhead gets debited to work in process, bless you, and credited to the overhead control account. Okay? That's applied overhead. Okay. Then on E, we have actual overhead was 4,415. So we actually paid overhead of 4,415. Where do I debit and credit the actual overhead? Anyone remember? We will use overhead. Overhead actually gets debited. So in your overhead control account, your debit side is always your actual. Okay, so that 44, was it 15? Yeah. 4415 actual gets debited to the overhead control. Okay. So that's kind of a review from chapter 4, where your overhead control, your left side is always your actual, and your right is your applied. As a review. Okay. And then the accounts, we're just going to put various accounts on it because overhead, it could be rent, depreciation. We're not going to credit all the different overhead accounts. So overhead control gets debited for the actual overhead amount. And then you can just put various accounts as your credit. Because if we're paying factory rent, that's, one account. Depreciation's another, indirect materials, indirect supply, we'd have like 10 accounts to credit. So they shortened it for us. Okay. Any questions on that? Let's see. F, we have job 115 was completed and transferred to finished goods. Well, that's fun. We need to figure out job 15. So, let's see, what do we have here? Job 15 was in work in process, and here are its beginning costs. So if I'm keeping track of job 115, well, it started with the 2640, the 1560, and the 1014. Okay. And then if I read back through B through D, I would be able to figure out the added costs. So it told me in part B, the job 15 got an additional 12,200 in materials added in. 12,200. In part C, it had 220 hours of labor at $14 per hour, and that was 3,080. Running out of room. 3,080. And then I would apply overhead at 65% of that 3,080. Okay. So I would get overhead at $2,002. And I would just have to add up all of that to get my total job cost. Okay. So we started with what was in work in process, the 3 costs they gave us. Part B, they told us we added 12,200 of materials. Part C, I calculated labor added, which was 220 hours at $14. And then overhead applied was 65% of that labor. So all total, you should have $22,496. So the total cost of job 115 was $22,496. Thankfully, that's the only job we have to calculate. And they told us it was completed and transferred to finished goods. So what would I debit and credit to transfer it?
You would debit finished goods,
Very good.
credit work in progress.
You got it. So I'm going to debit finished goods, the $22,496, and that's coming out of work in progress or process. So I debit finished goods and credit work in process. And then the last two journal entries says job 115 was shipped and the customer was billed for 125% of the cost. So it's been sold and shipped to the customer. So the first one, G1, we want to recognize the selling of this job or, transferring it out. So where does this job go? If it's sold, it's no longer in finished goods, right? Where would it go? Very good. So on G1, we're going to show this job moving out of finished goods into cost of goods sold. So that's going to be a debit to cost of goods sold and a credit to finished goods. And then it says we sold it at 125% of the cost. So how much did we sell it for? Very good. 28,120. So we just took 22,496 times 125%. And we billed the client. So what do I debit and credit to bill the client? Very good. Accounts receivable gets debited and sales revenue gets credited. And we don't have those accounts on the board. So then all we have to do is put those into, well, like I said, just the top 3 T accounts. They don't want all of it. So we want to balance our T accounts. Okay. So for materials, I had 12,730 plus purchases of 29,000 minus the credit of 33,700. Okay. So I added my debits, subtract my credits, and I should get an ending balance of $8,030. So we could put that into these T accounts here. I would start with my beginning balance, the 12,730. And then transaction A, we added in 29,000 purchases. I mislabeled that one. Let's see. On B, we transferred out 33,700. So again, add up our debit, subtract out our credit. Should get a balance in materials of $8,030. And then I would do the same in work in process. So work in process had a beginning balance of 21,340. I added in B, the materials of 33,700. I added in C, my labor of 6,320. And I added in my applied overhead of 4108. So those are all the costs added. So I'd add all those up. And then we had credited work in process for job 115 that was completed and transferred out for 22,496. So once again, I would balance that and it would have a debit balance of 42,972. Okay. And then the last one to balance is finished goods. It had a balance starting of 8,700. 8,700. We added in 22,496, the job 115 that was finished. But then we also sold that same job on G1 there. So that one's easy to balance. We just end with where we started. Because we transferred in a job, but then we costed it out. The finished goods has an ending balance of 8,700. Okay. And then obviously they're not on the homework, but your cost of goods sold would have the 22,496 balance right now. And then your overhead, remember you can subtract to figure out if you over or under applied overhead. So I would subtract those two. Again, it's not on the homework problem, but I think it might be on a different one, I'm not sure. It was in chapter 4. So I would subtract those two. Where's my calculator? So 4415 minus 4108. So $307 was my difference in my overhead. Did I over or under apply?
Under.
Very good. That's under applied. So my actual is greater than what I applied. So I under applied overhead by $307. So what happens, again, it doesn't show it on here, but that amount gets debited to your cost of goods sold. Okay, so that would actually go under cost of goods sold for under applied. It's costing us, and it's eating into our profit because we didn't apply enough overhead. So we would debit cost of goods sold and credit that overhead control. So then this would zero out. Okay. They don't show that in the exercise, but I feel like it gives us the full picture. Okay. Any questions on chapter 5 at all? Job costing? Good old journal entries, right? Debits and credits. Remember, you know, all of your inventory accounts are all assets, so they all increase on the debit side. Okay. Cost of goods sold is an expense account. It increases on the debit side. Overhead control is kind of its own beast because it should zero out at the end of each period, so it really doesn't have a normal side. It's just a control account. You guys good? Okay. Well, have a great week. Work on chapter 5. Don't forget to do the test if you haven't already. Then next week we'll start chapter 6, and then we'll have spring break. Woohoo, right? Maybe the weather will actually behave and we won't have, you know, freezing temperatures and